Okay, hello everyone and welcome. My name's Dan Stevenson and I work in the marketing department at FXChoice. Thank you for joining our technical analysis webinar. Just to let you know, the webinar will be approximately 30 minutes long. Our survey results tell us that most of you are happy with that length, so we're going to stick to it. Speaking of surveys, we want to say a big thank you to all those who completed it last week. It gave us some really useful insights, I should say. Thank you very much. Don't forget that if you have a slow internet connection, you can use your telephone to dial into this webinar, and it's often toll free. We sent you instructions how to do this in the email you received after registering. But again, this is only really worth doing if you have a slow connection. So Trevor will be presenting the webinar today. For those of you who don't know him, Trevor is a seasoned trader and technical analyst. In fact, he's been doing this longer than I've been alive. He worked at Merrill Lynch and was also global head of technical analysis at Bloomberg, so I think we're in safe hands today. For anyone who hasn't used GoToWebinar before, I'm sure most of you have, but to ask questions for Trevor, you need to use the questions tab in the little GoToWebinar widget. You can, just as long as you keep the questions on topic, and I'll pass those questions on to Trevor because he won't be able to monitor those questions himself while he's presenting. So Trevor, what do we have this week? Our stock of the week is Addidas this week. The trend is strong with this one, we think. Well, Trevor will discuss what he thinks about that. Also, last week, silver was outpacing gold. Will the same thing be happening this week? And the big news, I suppose, is the pound sterling with Brexit going on amidst all of this. Trevor was talking last week about the reverse head and shoulders pattern. This week, last week's unfortunately it collapsed. But is the bullish trend still intact? Trevor, over to you.
All right, Dan, thank you very much. Good of you to remember the the reverse head and shoulders.
Yeah, everybody remembers it now.
Yeah. Okay. Well, the dollar strengthened for most of the week, but then today has dumped, and this is affecting the two currencies. So the currencies that we're going to be looking at today. Here we can see the euro has surged today, really dramatically. The pattern here is that it's traded below the July-August zone here. This big consolidation here made this breakdown, rallied to it, has hit resistance at the bottom of it there. I've drawn that line across there, and is trading below it now. It's got it did have some support, which was interesting, from the 117 level, which was tested, and then that's where it came down to this week, and now it's bounced up. But I'm afraid to say it's just forming a new range. I think it's just widened out the range, and it will continue to trade in it. We're at the bottom end of it now. We've got quite a lot of resistance above here. I mean, really a lot of resistance above here, and we can't really say it's bullish again until we get through about 119.70 there. So for a moment, it looks stuck. What the worry is that this is going to turn into a major topping formation here, right on top of this bull run. This is now a weekly chart I'm looking at here in this bull run here, and this could be a topping formation, but I don't see anything recognizable that says it's a top yet, except that it's just consolidating. So we're watching closely there, but for a moment, the next near term, I think that this is going to churn around more. The focus is, of course, news focus is on Brexit, and this is the head and shoulders, reverse head and shoulders we were looking at, and this was last week on Friday, and then on Monday when I was talking last week, we were on this candle here, and it looked to me that we had broken the neckline of the reverse head and shoulders. Here's the left shoulder, here's the head, here's the right shoulder. I measured the height from the head to the neckline, projected up to the minimum price objective, which I read to be 133. But as soon as I'd said all that on Tuesday, it dumped hard like that. And I actually did take this trade myself. I went long of cable, and I was stopped out on Tuesday because it has returned below the neckline, which it should not do if it's a reverse head and shoulders, and so it isn't one. So this is the last time you'll see those arrows there indicating reverse head and shoulders, because now we know it wasn't one. It's one of the facts of life in trading is that it was a good looking pattern. I would still take this kind of trade again. but it failed. And probably about 20% of the time these patterns do fail, and this is one of those occasions. Since then, we've been churning away below it, and trading very, very wildly indeed. Big black candle here, white candle here, black candle here, doji star here, and then a strong white candle here. These are big ranging candles here compared to the average, and they look like piano keys changing black and white here on here. So it's churning about wildly here at the top end of this trading range. So we'll have to see how this will evolve. I still think that it's on balance bullish. If I go to the weekly chart here, I think we've still got a pattern of rising lows in here, and that it is consolidating above this major support point here, and that it should resolve itself to the upside. But that's a bit like as dangerous as making a call on Brexit itself. So I'm afraid the reverse head and shoulders did not work and was costly to me, and hopefully not to you.
Well, Trevor, actually, Trevor, we've got a couple of comments on this. One of our listeners, Kurt, I believe, was also here last week. He says he also got stopped out, lol. Oh. So you're not alone there. And okay. We've had another question from Donato Poveda. He asks, can you please explain the Mpo concept again?
Yes, so MPO stands for minimum price objective. So whenever you see it on one of my charts, when I find a pattern that I think is evolving, that I will measure where I think it's going to go. Minimum price objective. Of course, this wasn't where we got to, and so it wasn't a minimum price objective. But if this pattern had worked, I feel that this is the amount that we would most likely get to if it works, at least. And so I use that for calculating the risk reward on my trade. Sometimes, quite often, in fact, we go way through it, but mostly if it works, we'll go to it. So it's a good measure. How is the measurement made? Always in charting, whether it's a triangle, head and shoulders, double top, double bottom, wedge, any pattern, you measure the height of the pattern. The height, the vertical height, that's expressed in price, in units of price. What is height? Height is volatility, isn't it? The bigger the swings and the churning about inside the pattern, whatever it is. In this case, I thought it was a reverse head and shoulders. The more swinging about, that makes that a taller pattern here. When the market resolves itself, usually the bigger the move that will follow. If this pattern was squashed, then the volatility, which is the tension, is the fear in the market, was low, and probably the move out will also be. It's a logical thing. It's not an exact science, but it's a good measurement, and it does work in the long run. So that's how it's done. So when you see the measurement, I'll try and remember today to show you the measurements that I've made, but from this case, it was from the head to the neckline of the head and shoulders, measured vertically, and then extended from the break point, which took us up to 133, which was close to the prior high. And I did like this, and I would say my colleague who got stopped out with me, I don't think we should beat ourselves up too much about that. And given the same situation again, where you get a left shoulder and a head with a bullish divergence on it, a weak right shoulder, and then a break of the neckline, particularly following through in the way it did, I don't think that we did the wrong thing here. It's just that it didn't work out. That's the nature of trading. It isn't a science at all. But I think that the important thing to analyze is, did you lose money? Were you stopped out due to a mistake, or did you do the right thing and it was one of those occasions you got stopped out? I think this is what happened here, and if I see another occasion like this, I'll actually be quite excited once again, because I think it will in the next time it will be one of those 8 out of 10 times which will work out.
Mm-hmm. We have another little question from John. John asks if the US election. John asks if this US election will affect GBPUSD. What do you think? That's quite a big question, I suppose.
Yes, so
Yes.
clearly it will, because it'll affect the dollar. I'm reading and reading and reading what people are saying about what the effect of a Trump or a Biden win will be. And I've got as many people think is bullish as bearish in each case. So I think it will affect it because the dollar will move in response to that. But I'm not sure that the initial move that follows the election will be the final verdict on the outcome of the election. I think there might be reappraisals after that in the days that follow it. And also it depends how the election is won. If it's argued by Trump, and it could go on for months, theoretically, where he doesn't accept the result, I mean, that will be painful for the dollar, for the stock market too.
Thanks for your question, John.
Okay, let's go to the Australian dollar now. So the Australian dollar, we noted the Australian dollar was channeling the last time we were talking about it. I was wondering whether this might be a bearish flag, here being the flagpole, here being the flag itself. And then we had the breakdown here this week, which looks now like the breakout of the flag. So it had formed this nicely. I noticed last time, and you should notice too, the big round number. We talked about the importance of round number of 70 cents here that we would approach and should exceed if we meet the minimum price objective. And the minimum price objective is the length of the flagpole, 2, 3, 4, 5, 6 and a bit. 1, 2, 3, 4, 5, 6 and a bit would be down here. So I'm going to put this down here. Sorry, let's measure it again. 1, 2, 3, 5, 6 and a bit. You see, I'm being very rough about it because it's not a precise thing. People measure this and say it's going to go to some exact price. Well, it's not really. It's not like that. But I think this drop here and then this pause here would indicate that the next leg, if it fulfills, should be down to here and through that important 70 support point there. So this does seem an extraordinary thing to say, but look at this. If we look at the weekly chart, here we've had this long run up from March into the August high here, but doesn't this begin to look quite like some big topping formation going on here? And that's worrying, really, that it might be something more than just a pause in the market. So I'm quite open-minded to that. Flag here is the minimum price objective from it, fulfilling its full potential. And here's why you can see that 70 is so important. Not only is it the round number, it's these two lows, but it was the resistance here that paused us and formed this ascending triangle in here, and we burst up into the high, up into 74 cents here. So I'm worried that this might develop into something bigger, and the first part of it could be this flag. So well, we could be at the beginning of something bigger. So now let's go on to crude oil. And I'm using here the nearest contract month, the November crude on the WTI crude. So we're forming a range in here now. We have a broad consolidation from 41.90 at the top down to about 37, down at the bottom, a bit below 37 at the bottom. This happens to be a 38.2% retracement, this lower end of the range here, of the run up following the point where the nearby month went below the second month, a very dramatic event there. But if you measure that from the second month, not the first month, up to the high, then this is 38.2% of it. So that was a logical place for it to stop if it was going to stop. It's also a round number as well. The concern is that the trading from July here is now becoming a very broad top. So let's go onto the weekly chart here of it. That's that big spike there, which, because we've got the NOV contract, is showing. But this does look, after the run up here, like could be, we certainly lost momentum. There's no doubt about that. We've lost momentum. So watch out that this consolidation might in the end resolve itself by breaking down and not up. At the moment, we're testing the top of the range, and for me, with my style of trading, there's nothing to do in this at the moment, but I'm watching very closely. Breakout to the upside could release a lot of energy. Break to the downside could be really an explosive move there. Right, going now to the precious metals. I'm going to start looking at gold, but gold's not my favorite here. Going to jump to the weekly chart of gold. And we've been going up here. We've got now some lower highs in place. We've got a couple of support lines that were broken here, have now become resistance, and so forth here. But the problem is for gold, although it looks long-term bullish, it has got a lot of resistance right around where we are now and above. These elliptical patterns, when I draw them, just to let you know, a consolidation. So what? Let's say I'm going to put another one on here. This is a resistance area here, there, so we're developing a sort of friction for the market. And even if we clear this friction, which we're right in the middle of it now, see the RSI is at 50 here, right in the middle of it, and we do move up, we'll be moving into another large area where a lot of people bought and sold at very similar prices for a long period of time, offering resistance. But as I've been saying in recent weeks, there's a clear message coming here about silver and gold. Now this chart here is the gold silver ratio, so gold divided by silver. This means if it rises here, gold is outperforming silver, is doing better than silver. It's drifting now in this range, because silver is doing better than gold. And you can see here, for example, today silver is up 1.6%, and silver is up 1.6%, and gold is only up 0.5%. And so this is developing, and that's that bar there as the gold underperforms the silver. And so the best thing to be in is silver, and here's why as well. Is silver and gold are forming a similar pattern. Once again, I'll draw the elliptical shape in here. This is the same one, but the difference is that this one is separated from this one here with a gap, with a price gap. So here's the other one above, and just in case you don't remember it, it's already there. Sorry, I don't have to draw it again. So if I go to the weekly, back to the gold again, just to show you, here we had a consolidation, and then the second consolidation is right at it here now. So if gold moves up, it's got even more resistance above it, more profit takers to sell into it. But silver, this one is separate from that one, and there's a gap between the two, and really it centers on $27 here. So we've got room to move on the upside. So I think that this is the one that's going to continue to lead. It's catching up from previous underperformance, but I think that this is going to continue to lead, and it will punch into resistance at $27. And so it's got a clear run here from $24.50 or so to $27, which gold has not got. So my preference is for silver over gold. Right, moving to the stock indices now. Let's move to the indexes themselves first. And we'll look at the US 500. And here, I'm pleased to say, we've got the same sort of reverse head and shoulders as we were looking at before. And hopefully my colleague here bought this one too. So here we've got the left shoulder, here we've got the head, here we've got the right shoulder. We draw the neckline, which is the pullback between the left shoulder and the low, which is here, and the low and the right shoulder, which is here. I've drawn it here. We gapped away from it here very, very powerfully. We have pulled back, but we haven't pulled back right to the neckline, which is encouraging. Although we've got two black candles here, which I'm not happy about. I think this market is still on its way up towards the minimum price objective, which I will have measured from the head to the neckline, swung up from the neckline here, and that takes us at or through the previous high. here at 3,500 and what was it? Previous high, 3,588 was the previous high, and the minimum price objective is above that. So I like the look of this. I think that we can work higher on this, continue to work higher, and this, I hope, will redeem the reverse head and shoulders by reaching its minimum price objective. Another thing to point out, I did point it out before, just before we broke out of the neckline, the break point, and confirming that this was a reverse head and shoulders, the Bollinger Bands, here's the lower Bollinger Band, here's the upper one here, squeezed, but you know, this pattern here, this upper band coming down, this lower band going up strongly, this was warning us of an increase in volatility in the market, and we did indeed get it with a series of gaps after that. So once again, the volatility squeeze of Bollinger Bands was a good warning of the breakout, impending breakout. So next one I want to look at is the UK 100, one we haven't looked at yet, and poor old FTSE. Here it is. Let me look at it, show you on a weekly chart. It's been in a very clear trend on the weekly chart here, a channel, in fact, here, zigzagging its way down this channel, easing back. And that's because the pound has held relatively steadily, you know, surprisingly steadily throughout all this uncertainty and brinkmanship and gambling and games that are being played with Brexit. The pound has held up surprisingly well. Who'd have thought that it would have done there? It's done so at the cost that many of the constituents of the FTSE 100. FTSE 100 is quite an unusual index in Europe because, in fact, it's made up predominantly by commodities companies and miners and foreign miners who earn their income and take their income out they earn their money in dollars and take it out in dollars, and so they're dollar-based companies, not sterling-based companies, and so they are beneficiaries of a weaker sterling. Sorry, they're hurt by this weakening of sterling and strengthening of the dollar, and this is why the FTSE is vulnerable to that. So many miners, so many Eastern European miners in the FTSE 100. So we've got this drifting pattern, but I'll go back to the daily, and this is the reason that I've brought it to your attention here. So just to sort out all these lines, that's the 20 period moving average, that's the 50, that's the 200 there. This is the upper Bollinger Band, and this is the lower Bollinger Band here. So here we've got the downtrend channel that I drew on, that's on the weekly chart. But what you'll see is that though we've still got the pattern of lower highs in here, we've got lows which are now lining up. We've broken the pattern of going lower and lower and lower. Lower lows. We're now stopping going lower, and that's at 5,800. So this takes on a great deal of importance, 5,800. So at the moment it's holding, and that's rather constructive, but it means there's a lot of commitment to this level, because since the beginning of September, it's never been lower. Anybody who's bought it, and there's quite a lot of people because we've been there for 2 months here, everybody who's bought anything has paid more than 5,800. And a move through 5,800 would be catastrophic for a lot of people because nobody's had the chance to sell it lower yet in it. And the shorts will be relieved. The bears will be relieved because every time it goes to that number, it bounces, and it's very frustrating. Why won't the FTSE go down, they're thinking. And so this value is taking on a great deal of psychological importance, and a breakthrough it could be catastrophic for it. We could really collapse if that happens. But it's got to be said, at the moment, it's holding, and we're bouncing and bouncing and bouncing at 5,800. So watch it there. This could be the end of the move down, but I think we'd have to break the pattern of lower highs, and that's way above 6,000 before we can do that. But at the moment, watch out for the 5,800 for a big break if we go through there. We've got a slight narrowing up of the Bollinger Bands here, but it isn't really too squeezy to tell you it's likely to be right now. Now, coming towards the end, so I'll quickly go in, look at Microsoft, which we looked at last week. And again, I was obsessed last week with reverse head and shoulders. And so here's the left shoulder, here's the head, here's the high in between, here's the right shoulder, here's the high in between. This is therefore the neckline. We made the break on Friday, yes, we made the break. On Monday, we'd broken out, gapping higher, so it looked very constructive. I measured from the head to the neckline, from the break point, to give me this minimum price objective, which I saw was at the previous high, the early September high. Well, since we've actually come back. This is quite common. I can tell you it's about 40% of the time that we have a pullback, and I think the pullback is rather weak. What we've done is we've come back rather classically to fill the gap that had been left here on the bar in which we broke, and then we powered ahead on the Monday here, and we've come back, exactly filled the gap, and now holding above it. So I'm hoping that the bullishness will resume in this, having filled the gap. The market hates leaving these vacuums behind. The gap has been untraded areas behind. It's been filled, and I hope it can now go up. It doesn't look good today, I will give you that, but you know, I think this one will still work out. I use a 5-bar trailing stop on this. So 1, 2, 3, 4, 5 bar. So this is the lowest bar here. So my stop is just below here. So it's above the neckline where it has been. So I've been able to lift it a bit, but it's still not above my entry price. So now I want to look at Addidas, and just draw your attention to this chart. Let me first of all tell you that look at the weekly chart and show you how really strong this is. There aren't too many really strong stocks in Europe at the moment. Daimler's one, Addidas is another one. So we've been coming up here since the March low, making a nice pattern: impulse, reaction, impulse, reaction, impulse, a little bit high, reaction, now impulse, move here, but stalled. We're stalled now for several weeks. 1, 2, 3, 4, 5, 6 weeks we've stalled here at a bit of consolidation here, but not a very big consolidation here. That's not a stiff. If I drew the eclipse on that, it's only this size. You know, it's really quite a modest one there. So let's go to the daily chart. So this is what we're looking at here. The top of the resistance area is at about 286. We've got one spike above it, but it was rejected. So around that area there, and we've got this nice pattern of rising lows. So when you've got a horizontal line with rising lows below, who on this call can answer the question, what chart pattern is that? So you've got a horizontal line here, and then on the other side, you've got rising lows. Classical chart pattern, what would that be? Who knows the answer to that?
No answers so far. A flag. Matthew Anderson says it's a flag. A pennant.
No, not a flag.
A rising wedge.
It could be a rising wedge if this had an angle to it, but it's got a horizontal top on it. So it's a special type
bullish
of
pennant.
Triangle. It's a what triangle? So it is a triangular shape. We've got rising lows, and then across we've got a flat side to it. It's a ascending triangle. It's what it is. Now, ascending
triangle. We got it. Laura McNack just got in there just before you said it.
Well done to you.
Well done, Laura.
I mean, really. Well, you know, also, or some people I think do not know what these are. They most often break through the horizontal side, there. Now that's also in the direction of the longer term trend, so that also makes sense. The reason being is we're oscillating and churning, and every time the bears get control, the bulls wrestle back control at higher and higher levels. They are bullish. There is slope to this line. In this battle that's going on here, in this consolidation here between the bulls and the bears, the bulls are stronger because every time the market comes down, the bulls take control earlier and we don't fall back as much as before. But on the top side, we've got this horizontal side here. This means that every time the sellers get control, they push it down, push it down, push it down, push it down. No seller has anybody who's sold. There's two sides to every transaction here. Inside this consolidation here, has sold at 286 or 286.5 or lower, that price or lower. If we break up through it here, this means that many people who sold recently, suddenly with a very small change in price, are losing money, and this will cause a wave of short covering as a result of that. The buyers will be relieved also, because it's been frustrating, because every time we go to it, it just won't break through, and many of them are beginning to think, well, if it does go through, I'll load up on it, because there's a clear place where the market is turning bullish. So this level takes on very big importance because of its horizontal nature. That vulnerability of the shorts is not the case if the slope to this line. It's the horizontal line that gives us the vulnerability. Now we measure the height of the pattern, we measure it. It's a tricky one, this one, as to where to measure it. I think I'm going to measure it this way. It's I will stand corrected if somebody else wants to measure it another way. There's two, really, a modest one and a bigger one, but I'm going to go for the bigger one. 1, 2, 3, 4, 5, 6. I'm going to measure that. This is the height of the ascending triangle itself. 1, 2, 3, 4, 5, 6, about up to here. I'm going to leave it on here. If it doesn't break out, then of course this means nothing. But that's my minimum price subjected if we can breach this horizontal line there. We're very close to it. This is today here, so we're right on it. Could happen today or tomorrow that it could happen. Watch for the behavior. Look for a strong candle. I know it's not 100%. We've seen examples of that. Strong candle, big-bodied candle, closed near the high of it, high volume day, even a gap occurring. Those should give you conviction that this is a great and valid breakout. If it breaks out with a candle like that, as it did there, that's a rejection there. That was not a strong break. If we had a candle like this one that we're forming today above the line, that again would not be conviction. We want the candles where the buyers are buying confidently above that line there. So I'm drawing your attention to Addidas. We'll look at it next week. Maybe it fell and failed, or still oscillating inside the narrowing triangle, or it's broken down from the triangle. That can happen too, but most often it breaks up from this type of triangle.
Mm-hmm.
All right, do we have any questions, Dan?
Trevor, we do have quite a lot of questions. Do we have time?
It's up to you, Dan, and up to everybody else. If
well, we have a request to look at Germany 30.
Okay.
I suppose it'll be, is it DAX under yours, is it?
Yes. Okay, so let's look at the weekly chart
request
first.
Just to look at it, that's all. Just wants to take a look at it and see what you think.
Okay, well, here it is on the weekly chart, and this is another chart where we've lost momentum here. We had the move up from March, and it's now lost momentum, and I'm worried that this is minor resistance here, and it's come to it just below it, around this 12,000 level here, and it's struggling at that level there. It's now let's go to the daily chart here now. So it's churning about here. So I think it's good. It's volatile. It's good for mean reverting traders, the Bollinger type people. selling at the upper band, taking a profit at the moving average, buying at the lower band, take a profit at the moving average. That sort of trade is working well. Look at it here, buy at the lower band, take a profit at the moving average, buy at the lower band, take a profit at the moving average, sell at the upper band, take a profit at the moving average. These are the trading conditions which are good for it. This is the 50-period moving average here. So it's for those sort of traders. It's a trader's tool, but I think it's too much in a range, looking vulnerable actually to turning over. So that's my quick view on it.
Thanks, Trevor. Hope that answers your question. Okay.
Probably not what he wanted to hear.
Well, thank you very much. Please join us again, same time next week. Before you go, just a quick reminder to fill in the survey at the end. It really helps us to improve the webinar for all you all, so I suppose it's worth your time. Trevor, do you have anything to add?
No, just to thank everybody very much indeed. Sorry if anybody felt my excitement was infectious last week, but you'd have been half right anyway. And I think ultimately you'll be all right. But markets are, difficult at the moment. A lot of volatility, a lot of uncertainty, a lot of sporadic news. Bullish, bearish, black candle, white candle. A lot of that doesn't make it easy. But I think keep a cool head, keep disciplined, use technical analysis, plan your trades. These are all skills to develop, and in the long run, you will be successful. So thank you very much indeed, Dan. Thank you especially to everybody who's taken the time to spend it with me. I look forward to next week, and we'll see how it goes between now and then. Thanks very much, everybody.
Thank you. Bye-bye.
Yeah, may the trend be with you. Bye-bye.
Bye-bye.